If you think you need 20% down to buy a house, you're not alone. But the truth is, most first-time home buyers don't put anywhere near 20% down. In fact, many buy a home with 3%, sometimes even less. So in this video, I'm going to show you the real down payment that buyers actually use, what closing costs actually look like, and what programs we can use to help you save more money. So let's break it down. I'm Jon Taw, mortgage broker powered by Edge Home Finance. What that means for you is that unlike a traditional bank loan officer with one option, my team works with over 140 lenders and 400 loan products. We help families across 49 states find the right mortgage for their situation. So there's a myth going around that's 20% down payment needed. The idea that you need 20% down is one of the biggest myths in real estate. The rule mostly comes from older lending standards and conventional financial advice. But today, there are multiple loan programs designed specifically for you first-time home buyers, and they require much less money up front. Let me show you the most common ones. The first option is a conventional loan with 3% down. That means if you buy a $300,000 house, your down payment could be around only $9,000. That's right, these loans are actually designed for first-time home buyers, and they are actually very common. The key requirements usually included is a stable income, reasonable credit, and a manageable debt. For many buyers, this is the lowest traditional down payment available. So you got option 2, 3.5% down. That's a FHA loan, Federal Housing Administration loan. And these require 3.5% down. Usually for a $300,000 home, for example, that's about $10,500. Yeah, you telling me you can get into a home for $10,500 down payment. That's crazy because think of it, it's a $300,000 house and you can control it for $10,500. That's nuts. FHA loans, they're very popular because they allow lower credit scores, higher debt ratios, and flexible qualifications. This makes it great for buyers who are earlier in their financial journey. But here's something most people don't even realize. What if you can buy a home with 0 down? Not 3%, not 3.5%, but nothing upfront for the down payment. That's where VA loans come in. These are available for eligible veterans, active duty service members, and in some cases, surviving spouses. And they may allow 100% financing, depending on eligibility and guidelines, meaning no down payment required. Now here's the part that people get confused about. Does 0 down mean 0 money needed? Not exactly. You still have closing costs, just like any other loan. But depending on the situation, things like seller credits or assistance programs may help reduce how much you bring in. So the real question becomes, if you qualify for VA, why would you put money down at all? This is one of the most powerful benefits available, but a lot of buyers don't even know it exists. And many didn't even know that they may even qualify to purchase a house today. But wait! Down payment isn't everything. And here's the part many people don't realize. Down payment is not the only cost when buying a home. There are also closing costs. It's a mysterious thing that people don't understand, but closing costs usually include things like loan processing, title work, escrow fees, insurance setup, and taxes. Typically, they run about 2 to 5% of the purchase price. So on the same $300,000 house, closing costs might be somewhere around $6,000 to $15,000. But here's the good news about this. Many buyers don't actually pay all that themselves. There are thousands of down payment assistance programs across the country. These programs can help cover down payment, closing costs, and sometimes both. Some are grants, which means the money never has to be repaid. That's basically a gift. Others are silent second loans that can only be paid back when you sell or refinance. And many first-time buyers are shocked when they realize they qualify for these programs. Let me give you a realistic example. Let's say someone buys a $300,000 house and they use 3% down conventional loan. The down payment they require is just $9,000. The closing cost is around $9,000. So the total you actually really need is just about $18,000. But if the seller contributes to the closing cost or the buyer uses an assistant program, right? That amount could drop a lot, significantly. Sometimes buyers are able to buy a house with far less than expected. So the real question isn't, do you have 20% down? The real questions are, do you have a stable income? Is your credit in a reasonable range? Do you have some savings to start the process? Because once one of these pieces are in place, there are many different loan programs that work. So it begs the question, almost every buyer asks this, what credit score do I actually need to qualify for a home? Because depending on your score, your loan option can change quite a bit. So in the next episode of this First-Time Homebuyers Roadmap, I'm going to break down minimum credit scores, what lenders actually look for, and how to improve your approval odds. Make sure you watch that video next. Also, remember, if you need a strategic review over your finances to get you into a home, you can schedule in the link below. There will be a link. Or if you want to, there is a free home buyer's guide. But if you click on that link, you'll be able to get that guide and it'll tell you all about purchasing a home. It's valuable information. So on behalf of me and my team, thank you, and I'll see you on the next video.